Hi there, Serial Trader here. I'm going to take a look at the major US indices and we'll start off with SPX. Now this is the daily chart. Now I'm fairly convinced that the bottom we put in there on the 24th of January, that looks to be a durable bottom. And I'm inclined to consider this a completed ABC expanded flat for that larger wave 4. And if we're going to go on that presumption, then we can actually start making some targets here for the wave 5, the larger degree wave 5 move of this overall sequence we've gotten from the March 2020 lows. Okay, so let's take the length of wave 1. Now I know that wave 3 was a little bit longer than wave 1. Let's just confirm that here with a measurement. And okay. Yeah, so we were just ever so marginally longer in wave 3 than wave 1. So that would make me still seek wave 5 to be similar or equal in length to wave 1. So let's just project the length of wave 1 off of our proposed wave 4 low. And this will give us an upside projection of 5618, so just about 5600 on SPX. It sounds like a lot, but I mean, I don't know why anything should really surprise us at this point. The market clearly just goes as high as it wants to and doesn't need necessarily a good reason to do that other than just sentiment, right? But that's a different discussion. So that's one measurement for the potential wave 5 target here. Then we also just have a range expansion of this wave 4 price range. And let's do that. So I'm thinking the 1.32 and the 2. Okay, so if we just double the price range to the upside of this wave 4 that's potentially done, that gets us to 54.14. A very conservative level will be 5,046. I think that'll be smashed to bits. But 5,000 plus at least there using that tool. And then we have the overall span of travel of 1 through 3 off of 4. But then a 618 relationship of that is another potential target. Let's see where that lands. That's probably even higher. Oh, that will get us to 57.99, so 5,800. So you can start to see there's some pretty high targets up here for consideration. But okay, that's the longer term idea. So just put that aside for now. And let me delete some of those things just to clean up the chart now that I've shown some projections to the upside here on the longer time frame. Now, if we go over to the shorter time frame, I want to kind of explain why I think that the low is in, or why there's a good case for the low to be in. So we were kind of, I don't know, agonizing over the substructure of this wave C. Well, could we get a 5-wave complete? Well, we could, but it wasn't the nicest looking one, so we wanted this wave 4 up and then one more wave down for that wave 5 to be a prettier impulse wave down for CF4. But I think I mentioned in the last video, it kind of reminded me of the potential that we saw in December of 2018 where, yeah, you got that good move down, but it looked like it needed one more leg down for a prettier sequence. It just never happened. And what started out as looking like a wave 4 up, which this also did, this began looking kind of suspicious to the upside as potentially just a wave 4 rally. Now it looks like we're actually building the next trending impulsive wave up. And let me, this is the hourly chart, so let me just dive into that for a bit here. And I think you got the case of a leading diagonal wave 1. And we can adjust the degrees here afterwards. And then we had this 3-wave decline, ABC down for a wave 2. And let's just get another degree of trend up here. So that would be the initial 1, 2. Now we'd be looking for the 3, 4, 5. Let's say we'll just start with minor degree. Again, I might refine this later, but just so we have something to work with. So yeah, leading diagonal 5 up for the initial 1, ABC down for the initial 2. Now what I was initially thinking was, okay, we were doing the 3 and the 4, and maybe we're already in the 5 here of what's going to be the initial 5-wave move up off this major low that we did. But that doesn't quite work. And let me show why. So 4-1 overlap was right here. So we just ever so slightly did 4-1 overlap there on the 4th, yeah, the 4th of February. So that was Friday, yeah. That happened Friday, yesterday. So now we can no longer consider this wave 4 because wave 4 cannot overlap with the high of wave 1. Does that mean it's bearish? No, it actually could mean it's even more bullish, and let me explain. So we could be doing something more like this, where we're just simply subdividing the wave 3. So we got the 5 up, 3 down for the 1, 2. And now we got, now you can also see, I'm not going to do the well, you know what, maybe I will do the subdivisions. So here we got the 1, 2, I would say 3, triangle, 4, 5. Let's just get this down here. So we got the 1, 2, 3, 4, 5 of this larger 3. Hang on there. Just trying to think of what degree of labeling I want to do here. Well, you know what, we can change that after. And then we had this ABC down, another 3-wave decline. And now potentially looking somewhat impulsive here on a very short time frame off that low, and potentially in this still developing larger wave 3 to match this 1 and 2. So let's just get the requisite subdivisions here. So something along these lines. 1, 2, 3, 4, 5. Let's get that up one more degree. Yeah, that's starting to make some sense here. And let me just get rid of this for clarity's sake. Yeah, you can see what I'm working here. So we're just still in this developing wave 3, and of the wave 3 we've done the 1, 2. So basically we've got a 1, 2, 1, 2 potential count in play here, which is actually extremely bullish because that would indicate that we have a wave 3 of 3 price move kind of right ahead of us, which is a pretty aggressive, explosive kind of trending move should it occur. And you can see, so what do we do for a fib retracement on this initial move? We did just below a 61.8% retracement there. So that's pretty typical for a wave 2. Now I think here we did almost a 50% retracement for this impulse and this correction. Yeah, just shy of the 50% retracement. So really what we definitely have here is an uptrend starting. So a high, a higher low, a higher high, a higher low. And you can see we basically found support right before, right in the area that we previously found resistance. So that's quite bullish when prior resistance acts as support on the pullback. And now we're reacting off of that. So if we get another move up, we just have a series of higher highs and higher lows now off the bottom. So that's a technical uptrend. And in Elliott terms, since we did the 4-1 overlap, it looks like we got the 1-2, 1-2 count in play, which is extremely bullish. Next week could be very sizable to the upside. Now, I am long here, and I've added to my long position since the last video. Now, I would start to get concerned if we took out this low. So this area that was prior resistance and currently support, and we've had so far a nice little reaction off of. If we took out that area and started traveling below it for any length of time, now I start getting concerned that somehow this is just a 3-wave move up and we're going down. Although I don't currently think that's the case, so I won't explore the alternate wave counts, but they certainly exist. But as it currently stands, unless something dramatically changes to the downside here, this is looking pretty bullish. And let me just delete these sub-labels. So yeah, simple 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 for some sort of initial, and this will probably just be the initial, you know, wave 1 of on that larger time frame. Probably just the initial wave 1 of the big wave 5 that's going to go well into the 5,000s, right? That's what I'm thinking. So let me just delete some of these things to show you what I mean by that. So again, we're on this weekly chart. Let me just get rid of that. So we're probably just working this. We're probably just working the initial 1, 2, 3, 4, 5 of the bigger 5. And I guess that would be a minor degree like that. So that's kind of where I think we're at here. So we're just working the one of the bigger five. Okay. So I don't think it's really time to be getting too bearish until we got something substantially higher to the upside with good pattern development, a nice clean 5 up, hitting some of those upward projections that I mentioned earlier. Until then, again, unless something dramatically changes here early next week, I think we got to be pretty bullish here. So that's just my current take. And obviously, always ready to change my mind, but I'm just calling it as I currently see it. Okay. Well, that's probably good for as far as that goes. I think I've made my case that we got something pretty constructive at the upside underway here. So let's go over to the Thinkorswim Candlestick Charts. And okay, we've regained the 200-day simple moving average, so that's always a positive sign. As far as candlesticks go, I don't really see a clear signal. Friday was just kind of an indecisive day, more indicative of an options expiration day, which every Friday is. Some are more important than others, but you often see just kind of a choppy mess on a Friday. So not much to remark on there. Let's see here, weekly. Anything on the weekly candle that looks interesting here? Well, we held that 50-week simple moving average, so that's always constructive if that holds up. I don't really see much of a candle to remark on there. Okay, that's SPX. Let's go with the Dow Jones Industrial Average. Very similar look. We also did the proposed 4-1 overlap, so we no longer can consider this a wave 4 with a wave 5 down to come. So the Dow also invalidated that scenario, which makes me elevate that bullish scenario for the Dow as well. And again, just another indecisive day on the Dow. Barely changed on a closing basis despite the intraday volatility. Okay. And we're right above that 200-day simple moving average again on the Dow, so we've reclaimed that. Weekly chart. Largely the same as SPX. We tested and held the the 50-week simple moving average. Okay, that's fine. Let's go over to the Nasdaq composite first. So the Nasdaq composite, now tech got hit harder, so it's got more work to do to the upside, but nonetheless, it looks like a similar situation. Now we are below the 200-day on the Nasdaq, so a little technically weaker, or at least relatively weaker to the other two indices. But same idea, we got the potential 1-2 wave count, so a higher high, higher low, higher high, higher low. Looking for another higher high, so looking for an uptrend continuation here off the bottom. So really, directionally, it doesn't look any different than the S&P or the Dow. Weekly candlestick, not much to remark on there. We are below the 50-week simple moving average. So again, just a little technically weaker, just because of how much more it dropped, how much more aggressively it dropped. But I don't think there's any real directional differences. Weekly, we are oversold on the weekly oscillator here on the Nasdaq. Possibly just starting to cross over and up from that oversold condition. So there is that. Let's go to the Nasdaq 100. I think it's pretty much the same. Yeah, below the 200-day simple, but again, directionally, possibly the 1-2 wave count on the Nasdaq 100 as well. And yeah, there's not much really to remark on. It's different than the composite. Same idea here on the weekly. Looks like we're probably sitting right about the 50-week simple moving average there on the 100. Okay. All right, now on the VIX, this is another fairly bullish picture, I would say. The VIX had a big spike peak, and now we've been dropping precipitously on the VIX, and that's likely to continue. Lower VIX and higher market. That looks like it's in force now again. Okay. And what about the VIX tool? Hang on. So VIX tool, I think we're right on the kind of precipice of a buy signal according to this. So we're just hovering right around the red moving average, slightly above it on VVIX. So we need to get below the red moving average on VVIX. And we started threatening to get above the blue moving average there on Friday on SPX, but a little sell-off into the close put a stop to that. But early next week, if we get below the red moving average on VVIX and back above the blue moving average on SPX, then we're on a legitimate buy signal according to the VIX VVIX tool, and we're basically right there. So it could happen very early on next week, you know, possibly Monday. So that's something to watch. And anything else to really remark on? I think I covered what I wanted to cover. So yeah, I mean, basically, the bottom line is, all these short-term things aside, I think that the case is very strong that we did not make some sort of major top here at 48.18 on SPX. I don't think the big crash that everyone's looking for has started yet. Doesn't mean it's not going to happen. I just don't think we're there yet. And I think, you know, judging by, you know, the both short-term and longer-term price action currently that I can analyze, I think we're heading well into the 5,000s here in a potentially final fifth wave for this overall sequence off the March 2020 lows. So I think that's probably a good place to wrap it. And I'll try and get another serial trading video out, maybe tomorrow. And not about Elliott wave this time, but this time some more traditional technical studies. And hopefully y'all enjoy that. All right, Serial Trader signing off.